Okay, so let's have a look at the final adjustment for Part 8 for 2021 Kenny. So provision should be made for bad debts to be adjusted at 6% of debtors. So we're going to take the updated figure from working 3, which is 70,000. We're going to multiply that then by our 6% to find what is the new provision. So our new provision is 4,200. That's going to go into our balance sheet in your current assets. So in the balance sheet, you'll have debtors 70,000, provision for bad debts 4,200. You'll take those two away from each other. We need to find out if this is an increase or decrease. So we're going to have a look at the question and see if we have a provision for bad debts or a provision for bad debts already in our trial balance. So we got bad debts provision 3,500. So our new provision is 4,200. Our old provision from the trial balance is 3,500. So it's an increase. So it's extra money that we're not going to receive from our debtors or people who owe us money. So it's an increase of 700. So that 700 then is going to go into your profit and loss, and it's going to go into as part of your selling and distributions. So that's your provision for bad debt adjustment. So make sure you use your up-to-date figure for your debtors, multiply it by the percentage in the question. That's going to give you your new provision. That new provision then goes into your balance sheet as a current asset. So you have your debtors in the balance sheet as a current asset. From that, you're going to take away your provision for bad debts of 4,200. That's our new provision, 4,200. Our old provision was 3,500 taken from the trial balance. So the difference is going to be 700. That's an increase in how much money we're not going to receive from our debtors. So it's going to be an expense, and it goes into your profit and loss in your selling and distribution.